Market conditions. In this video you will learn what the different types of market conditions are, how we can identify them, and what the difference between a correction and a reversal is. A trending market is a market that moves clearly in one direction, up or down. Here is an example of an uptrend. In an uptrend, the market direction can be seen with a series of higher highs and higher lows. And here is an example of a downtrend. In a downtrend, the market direction can be seen with a series of lower lows and lower highs. This means that when the price is moving in a trend, not all the candles move in the same direction. It is the higher highs and higher lows in an uptrend, and the lower lows and lower highs that will determine the trend. So in an uptrend, not every candle is bullish, and in a downtrend, not every candle is bearish. The other type of market condition is a ranging market. In a ranging market, the price moves between an upper boundary and a lower boundary. Usually, you can observe a support level and a resistance level. However, a ranging market may not always be clear to see. A market condition can include corrections and reversals. It is important for you to be able to distinguish between the two. A correction is when the market moves in the direction of the trend, pulls back for a short time, and then continues on the original trend direction. Here is a correction in a downtrend. You see the market moves down, then pulls back a little, and resumes moving down again. A reversal is when the market direction changes completely. Here is an example when trend reverses to the downside. Here is when a market reverses to the upside. This concludes the video about market conditions. So far, you have learned that a market is either trending or ranging. In a trending market, an uptrend can be seen with higher highs and higher lows. A downtrend is seen with a series of lower highs and lower lows. In a ranging market, the market trades between an upper resistance level and a lower support level. There is a difference between a correction and a reversal. A correction is where the market moves in the opposite direction of the trend before continuing on. A reversal is where the market direction changes completely.